Have we seen the last leg of the Polkadot correction? Get ready for price to start hitting new highs. That's what we're going to focus on today. Our technical analysis has been on the money with a lot of the cryptos that we've been using Elliott Wave and Fibonacci for, and hopefully that's been helpful for you. But now we're going to look at what's next for Polkadot with high probability. If you like today's video, like, subscribe, hit the bell notification, get ready for 2,000 subscribers. I appreciate you because look, 4 months ago, it was only on 5, so thank you for being here. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading the Forex markets and currencies for 15 years, featured in the best-selling book, High Probability Trading Strategies, back in 2008. But now I focus exclusively on crypto and blockchain. So let's dive straight in. So we did an analysis last week and it got posted on the 28th, and basically saying last Polkadot analysis was on the money, which it was, because we was projecting this low and we was projecting this move to the upside. We should expect, what should we expect next? Are we due a correction? So we was anticipating this 3-leg correction. Then we jumped into an hourly chart and we just said, look, it looks like a 1, 2, 3, 4, 5 wave count, and then we should anticipate an A, B, C. So what I want you to really understand now is the following. I'm going to pull this up because before we jump into the live chart, look at this. This is the theory that I teach. By the way, I got my Fibonacci and Elliott Wave masterclass in the link below if you want to learn how to do this, because I'm trying to cover as many coins as I can. I've only got so much time, so I thought it'd be a good idea for me to teach you how to do it yourself. All right, so Polkadot, 1, 2, 3, 4, 5. We had this A, B, C correction, and then we had this move to the upside. Initial wave 1, we're referring to that as, and then this initial move to the downside, this part here. This is what we're focused on here. In terms of context and our opinion of the market, this part here forming. And typically, I haven't drawn it on this part of the theory chart, but this typically goes to an A, B, C, similar to this, A, B, C, but on a lesser degree. So that's actually what we're looking at when we're looking at the live chart now. So we're going to jump into a live chart with Polkadot. So let's go into the daily chart. So this is what we said in the last video. We said, look, and it wasn't that long ago. We said, here, is this likely to be a high 5-wave structure? Bump, bump, bump. We did some Fibonacci price and time. We said, yep, it's looking good. But now we've had this initial leg down, initial leg up, and then should we anticipate a third and final leg down before the price surges for a wave 3? Now, a wave 3 of a wave 3. Now, what the heck does that mean, Jagir? Wave 3 of a wave 3. When we look at this is a wave 3, but then it breaks down to a 1, 2, 3. This wave 3 of a wave 3 tends to be the most impulsive, just in all markets generally. And we want to be very, very, very aware of that, because I know you have been underwhelmed by Polkadot recently. Yes, it's a powerhouse project. We know that, and it's going to make cross-chain and moonbeams connected to Polkadot, which is going to make onboarding for Ethereum onto Polkadot. All of that stuff, brilliant, brilliant, brilliant. But like, what about the price? I want to make some money. Solana is surging to all-time new highs. Cardano is going to all-time new highs. Hey, where's Polkadot? And you're probably feeling that if you've been holding it for a while. My top tip, be patient, my friends. Be patient. Polkadot is going to have its time in the limelight. So the limelight is currently on Solana, it's on Cardano, and a few other projects that are surging to all-time new highs. Polkadot is going to experience the same thing. Very high probability. But we can articulate it now, almost pinpoint it. When is that likely to occur? So that's what we're going to focus on today. So look, it was on the money, right? We said, look, this looks like a high. We should expect an ABC correction. It looks like we've formed the initial part of the wave A. Looks like we're finishing off the wave B. And then we should anticipate a third leg down. So don't be panicked if you find a third leg down. That's healthy ABC corrections. And then let's anticipate the next move to the upside. So what we want to be aware of, let's just jump into an hourly chart now. Let me just get rid of all these arrows. Get rid of all these, get rid of all these. So look, just on the money. And sometimes, Elliott Wave and Fibonacci, it's high probability trade setups that we're looking for. High probability investment strategies, high probability decision making. It's never certainties, it's always high probability. So what we're going to look at now is, what is this structure here? So we pegged this, but we can delete this now. We can go, what is this structure here? This. We want to look at what's likely to occur in this phase of the market. So we've got this 1, 2, 3, 4, 5. I'm just going to get rid of these lines. Let's clean this up a little bit as well. so it's not distracting. Still keeping this question mark here. Like this is what we're actually saying here is actually it's a wave 1. Wave 5 or wave 1, right? We've got a question mark here. What I want to first say is, let's just zoom in a bit here. What structure do you see on this movement to the downside? Right, this here, right? I'm just going to move the arrow here. What do you see? Let me move it here. All right, let me show you this. Because we want information that tells us what's likely to occur. Very important. Yeah, we never know exactly what's going to occur, but we can anticipate with high probability. Look at this. A wave 1, a wave 2, a wave, oh, let me just get a smaller, I'll make it smaller in a second. A wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Look at that. Textbook. Beautiful. Right, so we've got this 5-wave structure to the downside, right? And what we anticipating that to be is the initial wave A. It's not the finish of the correction. The likelihood is, more often than not, corrections do not finish in a 5-wave structure. And we can be confident because there's a couple of things. I cover this in the masterclass because these are some of the basic rules. You know, a wave 4, this 4 should not trade into the wave of wave 1, right? And it hasn't, and it's gone down. And what we can also be confident with is an end of wave 5 target of a wave A. You go, well, what the heck does that mean? Yeah. We go, okay, down, measured here from here. Typical, most common wave 5 is 62% of what I just measured. And look at this, bang on, look at that, perfect. And a wave 4 is typically, if you measure wave 4 as an external retracement, is most commonly 1.618 to 1.272, and look, right in that range. So we know this is a high probability wave A. So what should we anticipate next? We should anticipate next is a wave B. If I can grab this, a wave B. So this is what we're going to focus on today, a wave B, right? Because a lot of people will mistakenly think this is going to be the continuation of the new trend, right? The continuation. That's the, if you're not trained, if you don't know the psychology of the markets, buying and selling behavior, this is what you would anticipate, a new high being made over here. But that's not the probability. What's likely to occur more often than not, and again, I'm using the word likely deliberately because we're working with probabilities here, is we got this A, B, C of a wave B. Yes, and that's called the correction to the correction, right? So that's what we're going to focus on. And then we should anticipate a third leg down. I say third meaning 1 as in an A and a macro level B, and then this third leg down, right? So that's what we're going to focus on. Hopefully I'm being clear over here. So now we can just get rid of this. We're happy with that. Great, yep. Now this wave A, by the way, is still a question mark because the wave A gets confirmed once this low gets taken out, right? So we need this low to get taken out as well. So just be aware of that. But now let's just focus on this part here. So let's look at an ABC. I'm going to draw it here so it's just a bit clearer. Wave Bs typically do a minimum of an A, B, C of a B. Yeah, that's the lingo. I know. I cover it in my masterclass. I cover the foundation, how to notate these things, but then how to measure them using Fibonacci price. That's what we're looking for. I'm going to keep it, try to do two things. I'm trying to make sure we're on the same page. So when I'm talking, we're seeing the same thing. But what is the typical price and time zone for this end of wave B? What should we anticipate? All right, let's have a look at that. Well, first of all, we're going to do a correction, a retracement of this wave A. We're going to go to this low here. And the three values that we want is a minimum of 50%. Yeah, all corrections are most commonly, not always, but most commonly a minimum of 50% and a typical maximum of 78.6 with an in-between of 62%. Let's just get rid of this for a second. Then we want an alternate price projection. And in the course, I call it a Fibonacci extension. And the reason being is with TradingView, they use the term on the here, trend-based fib extension. So fib extension just basically means we're going to measure this wave A, and we're going to project it forward from the wave B low and project it forward. I'm going to cover that in a bit more detail because this is one of the absolute key measurements that you'll do time and time again when it comes to projecting and doing your analysis. Look at this, right? Beautiful cluster, beautiful cluster. So what we just did there, kind of like giving you a mini masterclass, because I can't help myself. I'm a teacher by trade, by the way. I used to teach mathematics in secondary school. So look at that. We've measured this wave A and we're projecting it forward. And that's what that red line shows. So what we have now is, we can get rid of this because we've surpassed that already, is we have this really narrow price zone, right? But that's not good enough. We want time as well. Now, to be honest, I haven't done time analysis in the masterclass because it's a bit more advanced, but I'm just going to do the basic stuff here. There's a typical wave B. Any correction takes 50% to 100% of the previous time because he's right in that zone. And then we're going to do alternate price projection, alternate time projection. You go, what? Well, basically, we're going to measure how long it took to do this wave B, and we're going to project it forward from this. So wave A, project it forward from this time here. And most common, it's roughly the same time length. So now we've got this very narrow time zone. Look at this. And a price zone. So look at this. We got this zone here. Now, it doesn't mean it's guaranteed. It just means it's high probability, very high probability that we're going to see this wave B high being made, this wave C of a wave B in this time zone, time and price zone. All right, then we're going to look at momentum in a second also. So now let's just zoom in right away in. Because I don't want you to panic, because Polkadot, it's probably going to go down before it goes up. That's the probability. That's what it is. This pattern's not very clear, but often these break down to 5 waves. I'm going to stick on the same chart and go to a 15-minute. I don't normally do intraday data, like an hourly chart, which is what we're on, is intraday, but 15 minutes goes into a bit more detail again. But the reason I'm doing this is sometimes you will see a wave structure that helps you kind of break down and narrow this down. And what I'm seeing here, and again, keep in mind that Elliott waves, only 50 to 60% of the time there's going to be a clear chart pattern. We can go a wave 1 or a wave 1, either or, but more importantly is this wave 3. It looks like a clear wave 3, 4, and this wave 5 forming. Or wave 5, yeah, a wave 5. If I just if I go back to an hourly chart, just want to make sure this is showing there as well. So what we have here is a beautiful structure of a wave 1, 2, 3, 4, a wave 5, of a wave C, of a wave B, right? So what the heck does that mean? Why is that useful information? Well, we can do now a 5 wave. So we've got price analysis for the wave 5, sorry, wave C and the B, but we can also do the same for this end of wave, potential end of wave 5. So the simple one that we're going to do is a similar one that we did before. Measure the wave 1 to 3, project it from this wave 4 low, and this is the typical maximum range. And we'll probably see that this coincides with the daily chart or the hourly chart. So if I now just go back to the hourly chart and see the other data would also pop back in. And look, that's the typical maximum. That's quite high. Let's just see where it flows with 62%. Yeah, 62% is going to be the likely one. That's like way out. It doesn't coincide with the others. So we can kind of be confident that that's not going to be the case. But you'll see the 62%. So now we've got a confluence of events saying Fibonacci price, Fibonacci time. We've also got pattern or multiple degrees. We've got the wave B, we got the wave C, and then we've got the wave 1, 2, 3. That's 3 degrees of wave count. Doesn't mean it's guaranteed. It just means it's very high probability. So what we're likely to see is that the market will go into this range, and then we'll see the next part of the pullback. Now that might be scary, especially if you've been holding Polkadot and it's currently $28, give or take, and it might not be comfortable because you want Polkadot to do what Solana's done, right? You want it to do what Cardano's done, right? Well, guess what? Cardano was moving down and sideways for a while. Solana was also, if you saw my other 2 videos, was due to do a correction, which was similar to this, a correction, and then we projected the wave 3, and boom, textbook, it just flew. It flew like there was no tomorrow. So let's just finish off with a daily chart, because we want to take into account the weekly momentum is bearish. Let me just see, make sure this is an 8. Yeah, it is bearish. Want to be aware of that. We'll probably get like a reversal in this top half over here just because of the way the pattern is unfolding. And then with Polkadot, I'm going to go to an 8. This is the faster indicator I'm going to move to. Is we'll probably see the market a couple of days, 1 or 2 days, get into overbought, and then it'll do a bearish reversal, which will coincide with that wave B. And this low over here will probably coincide with a wave C, and then we'll look for a move, a reversal on the momentum, and that would more often than not coincide with the price movement. Whew! That was like a masterclass in Polkadot, right? Polkadot. But now, what do I want to finish on? Let me just zoom out with this hourly chart. Let's just zoom out. Make sure this is crystal clear so you can anticipate with high probability. Let's see, sorry, it's going to be better on the daily chart. Let's keep it on the daily chart. Let's anticipate with high probability what's likely. The word is likely, my friends. Likely to occur next is this here. Now, keep in mind, this wave A wasn't that steep. So we may see a correction like this. And that will be a sign of strength, because most typical corrections are in this 50% range. But the minimum that we should anticipate is 38.2%. And if that is the case, that would be a sign of strength to say, look, there's a lot of buying power, even the corrections are not looking to pull back, and there's a lot of optimism here. So anticipate this. I just want to make sure this is crystal clear. We're on this wave B. We're looking for this wave C coming after this wave B, which is down here. It's total forecasting, guys, but crypto markets just apply so well to Fibonacci and Elliott wave theories into this zone. Yeah, we might, if I just do this, I'm just going to do this. Boom. That's going to be the likelihood. And if this low down here gets taken out, which is what we're going to anticipate, this low down here, we will be able to project at that time more closely what's likely to occur, and then what's going to be the optimal time to buy before the Polkadot next move. But now you have this before the correction, so you can plan on everything else. Whew! Polkadot. Powerhouse. This is exciting times for Polkadot. I know you don't feel so, because I've been reading your comments. Oh, by the way, just so you know, sometimes YouTube cancels or doesn't let me read your comments. I don't know if it's certain words. So sometimes if I don't reply to you, because I reply to every single comment, by the way. If I don't reply to you, it's because YouTube hasn't shown me your comment. It says now no longer available. I don't know why. Maybe it's a word that they've got an algorithm for. But in your comments, you know, a lot of you the words are disappointed with the performance of Polkadot's price. But don't be fooled. Polkadot is a powerhouse, but from a technical chart pattern, if we look from a macro picture, if I just zoom out, get this in here, the macro picture, look what Polkadot did today, this year, right? This move to the upside, healthy correction, quite a steep correction, but we should anticipate a big move. But this big move is not yet. We should expect down correction, and then it's like the rest before, the calm before the storm, the rest, the recovery, the breather, get the breath back, and then the next price surge. And that's what we should anticipate. Yeah, that looks clean. I'm quite excited to see how this unfolds. Yeah, hope you are too. What did you find most useful? Because our analysis, if we just kind of look back on point, you know, we projected this high correction, it's done that move down. Now we're talking about this part, and it's just textbook stuff. And when it unfolds this way, we want to leverage that information, knowing, okay, the psychology of Polkadot is applying really, really well to Fibonacci ratios. So if you like today's video, like, subscribe, hit the bell notification. If you want to get more from the analysis, take my free masterclass on Elliott waves and Fibonacci. I cover some high level stuff to get more from the videos. I do have some optional courses that you can do. I've kept them really, really cheap, but you can really dive deep if you want to learn this stuff. So then you can do your own analysis with your coins. So let's finish on a quote. Today's quote from my book is chapter 4. It is, "Don't buy into your circumstances." It's the name of the chapter. This one, see if you can guess who this is. Let me go over here. "He who is good for making excuses is seldom good for anything else." He or she who is good for making excuses is seldom good for anything else. That's Benjamin Franklin. Basically says, look, listen to your words. You and your world are composed of your thoughts. The wise person controls their thoughts. So it's about you making sure you're controlling your life, your thoughts, your thinking, because that has a powerhouse hold on you. So yeah, keep up the work. That was Polkadot. That's exciting. I'm looking forward to seeing how this unfolds. Yeah, and let me know in the comments below what you found most useful from today. All right, see you soon.